Hey there, Kim here. Happy Monday. Today's video, we're going to be talking about the $10,200 tax credit and who will be receiving their refund first. It is May. So we'll talk about the details of the $10,200 because I feel like there's still a lot of confusion around it, and rightly so, because it is kind of a complex subject, especially if you filed your taxes early. So what this is for all unemployment, when you receive unemployment, we have to pay taxes at the federal level. Now, we'll get into states in a minute, but all unemployment income is taxable, and some people have elected to take taxes out of their unemployment checks. Some people have not. Definitely a personal preference. Doesn't matter what you choose to do, but if you don't take taxes out, you have to be prepared to potentially pay taxes at the end of the year. So what the federal government decided to do was pass a bill in February that would waive taxes on $10,200. So if you are in, say, the 10% tax bracket, this can save you $1,020 of taxes, which is pretty significant, especially now. It's almost the equivalent of a stimulus check, right? So $1,000 is typically the average tax refund that people can expect. If you're in a higher tax bracket, you'll get paid a little bit more. So if you make $20,000 in unemployment last year, in a normal pre-demic world, you would have to pay taxes on $20,000. But because they passed this bill, what you need to do is get your unemployment income, we'll just say it's $20,000, subtract $10,200 from that, and that would equal $9,800, and the $9,800 is the amount of money that you have to pay taxes on. So in that scenario, your taxes are pretty much cut in half, which again is pretty significant. Now, this only applies for individuals that have earned $75,000 or less, meaning their AGI is $75,000 or less, their adjusted gross income, as well as married couples can only earn $150,000. If you make any more than those levels, then unfortunately you will not qualify for this tax benefit. So I did have someone ask on my channel that if I owe back taxes, will this money be used to offset those taxes? And the answer is yes. So if you currently owe money to the IRS, they will deduct this amount of money from the taxes that you owe, and then that's less money that you have to worry about, which is kind of cool. So if you have not done your taxes yet, or maybe you did them after the bill was signed back in February, then you probably don't need to do anything. If it were me, I would definitely check your tax return just to make sure that you're not paying taxes on the $10,200. I will post a video in the link in the description of this video that shows you exactly where you need to look to make sure that you're not paying taxes on this. So I'll definitely post a link to the video below. But most of the confusion is coming from those that have filed their taxes early or before the bill was even signed. Because what happens is people would file their taxes, but they're not receiving this credit. So the IRS did issue a statement saying that they were going to take care of the amendments for us. So we didn't have to fill out any more paperwork or anything of the sort. Which is cool, right? I mean, that saves people a lot of headaches. It makes things a little bit more automatic. However, I do want to caution you that because of this tax credit, your AGI will now be less and could potentially make you qualify to receive additional credits. So what I recommend, especially if you use a software like TurboTax or Tax Act or H&R Block or whatever, or if you use a tax preparer, I would definitely try the amendment route just to see if that does qualify you for additional savings, because you could potentially be missing out on additional refunds. So what happens is, say your AGI is, $30,000 or whatever. With this tax credit, it would then go back down to 19,800. And that amount could qualify you for additional tax credit, but you wouldn't know unless you would actually try to file an amendment. So if you do have some sort of software like TurboTax, it's simple to do. All you need to do is click on, let's say you log in, you click on a button that says file an amendment, and it'll literally walk you through the process, and you'll be able to see if in any additional tax credit that you'll be able to receive. Now, what kind of makes things easier when you do this is, I got a question about, how do I know if I have to do an amendment for my state? And unfortunately, all states are different. I do have a screenshot here that shows all states that are waiving unemployment, as well as all states that are still requiring people to pay unemployment tax. And when I say they're waiving unemployment, that obviously means the unemployment tax. But what you can do is, if you do use a software, you can file an amendment at the federal level, as well as file an amendment for the state level. And then again, you'll be able to see if, you'll be receiving a refund or not. So, the state's tough because every state is different. Everyone has their own rules. The question did ask further, will they let us know if, like the IRS, right? The IRS is doing this automatically. So what about the state level? Or will they automatically, let us know if we have to file an amendment? The answer that I would have for that is probably not. Most states probably won't. However, hey, maybe you live in a state that will, but I would definitely be proactive and actually initiating that as well. But again, take a look at this map, because it definitely shows you the states where they are waiving unemployment, as well as the states where they are, they're requiring people to pay unemployment tax, as well as there are some states that you only have to pay partial unemployment tax, which is kind of cool. So the real question is, when will you receive your refund if you did in fact file your taxes prior to the bill being signed? So the IRS will issue refunds in 2 phases. It will start with taxpayers eligible to exclude up to $10,200 of unemployment for their federal taxable income. So this could mean that, if you're a single filer, it could mean that. It could also mean that if you are a married couple and only one of you is claiming, was on unemployment, there's still kind of a gray area with that as far as married couples. Are they in phase 1 or phase 2? It's very confusing. What's not, right? The second phase includes married couples who file a joint return according to the IRS. And I forgot to mention that couples can waive up to $20,400 of benefits if both spouses were on unemployment for the year 2020. So, and again, it's unclear whether the first phase of payments will include married couples, in which just one spouse receives unemployment benefits, or if they would fall in the second round. So state checks will start to go out in May. And unfortunately, it will not be done in May. Checks will continue to go out actually throughout the entire summer. So it'll be interesting to see how quickly they get these checks out. So yeah, hopefully that helps clear things up. If you still have questions, definitely let me know in the comments, and I will definitely do future videos to address those questions. So thanks for watching, and I will see you on the next video.